Good day, ladies and gentlemen. My name is Miracle FRX, and in this video, we'll be looking at the best T-wave strategy for you. We'll be looking at what T-wave strategy is. We're looking at the significance of T-wave strategy. We're looking at the key points regarding to T-wave strategy. We're looking at the tips for effectively utilizing the T-wave strategy. Okay, so if you're watching this video for the first time, or if you're still watching this video, make sure you're with your writing materials to jot down the main points and to jot down your questions so that whenever I want to ask them, it won't be hard stuff for you. Okay, so let's kick off. What is T-wave strategy? The T-wave strategy is a trading approach that typically focuses on the analysis of price movements and market trends using the concept of T-waves, which often associates with Elliott wave theory. In this context, T-wave can refer to specific patterns in price charts that traders analyze to predict the future price movement. Okay, so what is actually this T? You might be hearing me saying T wave, T wave, T wave. So T actually stands for trend. Okay, trend wave strategy. Okay, so trend, from the word trend. Okay, so for example, now let's say we're having an uptrend. Okay, we have an uptrend. These are trend line. We're having an uptrend. This is an uptrend. Okay, so this is an uptrend going further. Okay, this is a trend line. This is an uptrend. Okay, trending market upwards. Okay, so what is actually a T wave for us now? So we have two types of uh T waves. Okay, we have the phase one and the phase two of the T waves. Okay, so the phase one is actually the impulsive move P1, then P2 here is, sorry, P2 is the corrective move. Okay, P2 is the corrective move. Okay, so the our target is for us to get what the start of the phase one. Okay, phase one and phase two. Okay, until it no longer holds. Okay, same goes for the downtrend. Okay, let's say we're having a downtrend here. So this is a downtrend. Market comes this way, comes this way, comes this way, comes this way. Okay, so the phase one and phase two. Okay, so same goes, oh, okay, for the downtrend. Okay, so that's it. Okay, so our aim is for us to get the beginning of the phase one. Okay, so using a bar or a bar, yeah, a bar. Okay, let's say the price come, this is the open, sorry, this the open, this the high, sorry, don't get to this is the open, this the high, then this the close. Okay, just like a T form. Okay, a T form. I'm not just getting this right, but then just know that it's always in a T form. Okay, so if you go to the chart, I'll still show you more on that. Okay, so the price opens here, then sellers takes the price downwards, then buyers come here, and the price closes here. Okay, showing you that what the buyers, the sellers are no more in charge. Okay, the sellers are no more in charge. So to show you that the market has actually changed from the current price which is at. Okay, so we'll be looking more on that when we go to the chart. Okay, so let's look at all the things which we have here. Okay, so significance of the two-way strategy. Okay, so market predictions. Okay, so with the two-way strategy, you can predict the market. Okay, you can predict the market by analyzing the T-wave by their patterns. Okay, so traders can make more informed predictions about future price movement. Okay, so let's say the price is moving from phase one to phase two, phase one to phase two. Okay, phase one, phase two. Okay, you know that yes, price has come here before, then price will still do this phase one and phase two as it's in an uptrend. Okay, so this is actually the market prediction which I'm talking about here. Okay, so the market, you can use this wave to predict the market. Okay, it's actually a simple strategy which will help you in predicting the market. Okay, it helps you identify the trend. Okay, trend identification. Okay, so if you see a market going this way, upwards, upwards, you know that what it's what an uptrend. Okay, so another thing in our two-way strategy, okay, we don't want to trade the sideways trend. Okay, we don't want to trade the sideways trend. We just want the uptrend or the downtrend. Okay, so these are the two trends which we're actually focusing on in our T-wave strategy. Okay, so the trend identification, the strategy aids to recognize the overall market trends, okay, whether bullish or bearish. Okay, so we are not actually looking for consolidating markets, we're looking for a bearish or a bullish market in the trend. Okay, so risk management. Okay, so the T-wave strategy actually help us to utilize our risk management. Okay, it help traders to test stop loss and take profit, okay, based on wave structures, helping to mitigate losses. Okay, so it help us to mitigate our loss and help us to make good risk management. Okay, let's say we have this bar here, so the bar opens, sorry, the bar opens here, closes here. Where will you put your stop loss? Okay, put your stop loss here, then, sorry, just below the bar, then you take profit here. 1:1, you enter here, 1:1. Okay, 1:1 risk reward ratio. Okay, so this is actually a good risk management for you. Okay, you see, entering in the open or in the beginning of that phase one. Okay, so entering in the beginning of the phase one. Okay, this is the phase one, P1. Okay, then P2 here, P2. Okay, want to enter here. Okay, want to get an entry here. It's just like a T. Okay, want to get an entry here, and then boom. Okay, 1:1 is our target. Okay, so that's it. Okay, sorry, psychology insights. Okay, flexibility, pattern recognition, historical context. Okay, so psychology insight, the T-wave often reflects the market psychological by understanding how emotion influence trading behavior. Okay, so traders can actually anticipate the market movement and improve their timing. Okay, so it helps us to improve our timing. Okay, our psychological timing in the trading. Okay, flexibility, the strategy can be applied across various markets and time frames. Okay, so it's actually flexible, you can apply it through different time frames, through different trading conditions. Okay, so pattern recognition, identifying specific wave patterns which actually enhance our traders ability, okay, to capitalize on the market, okay, inefficiently. Okay, so with this now, it helps us to capitalize on the market. Okay, let's say we're having the downtrend, then market comes on phase. Okay, let's go this way, and it comes on phase one, it's here. Okay, so it's now going down. Okay, so this is a downtrend. Okay, so this is the phase two, phase one, phase two here. Okay, so phase one, phase two. Okay, so know that the phase one is always the impulsive move, and phase two the corrective move. Okay, so another one is the historical context. Okay, understanding the past wave formation can provide insights, okay, for future market behavior. Okay, so if you can understand the history of, okay, of what have happened before, okay, if a wave have formed before, then we expect it to form again. Okay, that's actually technical analysis. What tends to happen before has uh, is bound to happen again. Okay, so this is actually it for historical content. Okay, we can use that to learn from historical trends. Okay, we can use it to learn from historical trends. Okay, so the next one now is the key point regarding to, yeah, the key points regarding to trend wave strategy. Okay, so one of the key points is actually, it's actually a trend based strategy. As I said before, it's a trend based strategy. You We are not expecting to trade a sideways trend on this. Okay, we are not expecting, whenever I see a sideways trends, we just don't trade it. Okay, with this strategy. Okay, our main aim is to trade with either a bullish market or a bearish market. Okay, either a market that's going up or a market that's coming down. Okay, with these two market conditions, we actually get what we want. Okay, so open, high, low, and close, that's the OH, L, and C. Okay, so this the open is open. Sorry, let me give us better space for that understanding. Wow, open, this is the high, this here is the low, and this the close. Okay, so market opens here, goes high here, comes down here back to the open, comes here, comes lowards here, comes here, and closes here. Okay, so this is the open, high, low, and close. Okay, 1:1 risk reward ratio. So we'll be using indicators, the moving average, EMA 8 and EMA 20. Okay, that's exponential moving average 8 and exponential moving average 20. Okay, so multiple time frames to confirm the trend. Okay, we'll be using multiple time frames to confirm the trend, whether it's an uptrend, whether it's a downtrend. Okay, so whether it's a consolidating market, whether are we to avoid this market or are we to trade in this market. Okay, so that's actually the key points that we need to note regarding our T-wave strategy. Okay, so next one is tips for effectively utilizing the T-wave trading strategy. Okay, set clear entry and exit points, keep track of market news, maintain a trading journal, be patient and disciplined, look for confirmation, practice risk management. Okay, set clear exit and entry points. Okay, so like I said before, we are expecting to enter the market at the beginning of what, the phase one. Okay, so this is the first phase one here, this the phase two, which is P2, and this is the beginning of phase one, another phase one here. Okay, so make clear or set clear entry and exit point. Okay, so if you can enter here at this T, okay, you can enter here, then your stop loss should be here and your take profit should be above. Okay, to get the impulse of the phase one. Okay, it will actually help us in our trading. Okay, so keep track of market news. Okay, so while trading, make sure you are keeping track record of the market news. Okay, because the market news they can actually be fluctuations in the market news. Okay, take note of your fundamental news, take note of the historical fundamental events like the CPI, like the NFP. Okay, most of these they actually affect the market. Okay, they make the market to spike, they make the market to move uh unwanted, or the market to move against us. Okay, so make sure you're watching the news. Okay, so you don't trade this impulse or this strategy during the news. Okay, you don't trade this strategy during the news. You trade this strategy after the news or before the news comes out. Okay, so this is actually the main thing we need to know about this. Okay, so maintain a trading journal. Okay, writing down your trades. Okay, writing down your trades will help you to know what you're actually doing. Okay, are you making progress or are you not making progress? Okay, so when you're trading, you're writing down your journal, you're writing down your mistakes, you're writing down your success. Okay, with that you're able to check. Okay, come back to check, cross check, and watch. Okay, see, I did this mistake, I did that mistake, I set my stop loss wrong, I set my TPA wrong. Okay, so you'll be able to correct it from that. Okay, be patient and disciplined. Okay, the market is not going anywhere, the market is always there. Okay, so be patient and disciplined to get this trading strategy very well. Okay, look for confirmations, look for candlestick confirmations, look for price actions. Okay, so practice risk management. Okay, and with this I think we'll be going on to our charts to get more in-depth knowledge on what the T-wave is. Okay, so let's go on to our charts to see what this example I've been giving us is. Okay, so these are M30, these are XAUUSD gold spot on M30. Okay, these are MT5 app. So let's show you an example of what we've been talking about on the TS strategy. Okay, so we said we have the impulse and corrective wave. Okay, so this is an impulse wave and this is a corrective wave, impulse wave, corrective wave. Okay, so let's show you an example of the bar which we were talking about before. Okay, so this is now the example of what we're talking about. Okay, so this is the example of what we're talking about. Okay, you can see where the market opened. Okay, market opened here, market opened here, closed, went down, went upwards, came downwards, came here, okay, and closed here. Okay, so we see it now. So if you want to enter this market now, we are expecting to enter this market at this level. Okay, so entering the market at this level, putting our stop loss here and then I'll take profit above, okay, 1:1 risk reward ratio, okay. So you see that with this now, we have a clear understanding of the market, we have a clear, concise decision of the market, okay, in a good direction of the market, okay. We see this now, another example now. This is another example, okay. This is another example, but this one is a phase two trade, okay. This is a phase two trade. It's actually corrective, okay. So you see that there's no much movement on it, okay. Unlike the other one, sorry, unlike this one, okay. Because this one now, you see that when the market move, it continued going what, further up, okay. Continue going further upward. Continue went going impulsive, okay. Continue going impulsive, okay. So this is actually a typical example of the impulsive wave, okay. So let's look at another market condition. Let's look at another market condition. Let's look at BTC on the H4 time frame, okay. So yeah, so this is BTC, okay. So this is another example of what I was talking about, okay, about the wave, okay, which I'm talking about, the T wave, which I'm talking about, okay. So we see that the market opened here, okay. Market went up here, market sellers pushed the market downwards, buyers came upwards, then market closed here, okay. So you see it now. If you want to enter this market here, you enter the market here, then your stop loss below here, then you take profit above this level, okay. So with this now, you see that it's actually giving us a safer side, okay, keeping us in the safer side of the market, okay, to get our good our required profits, okay. So you see another one here now, another one is here, another example, okay, of the T wave, okay. So the market opened, sellers took it down, buyers came up, close here, okay. Then your stop loss should be here, your entry should be above this, and your take profit should be above, okay. See this one now, we have more risk reward ratio, okay. So with this now, you can be able to get a concise and a good clear direction or a clear entry of the market, okay, making sure to enter at the beginning of what, the phase one, okay, of the phase one, okay. So this beginning of the phase one, just like a T, okay, just like a T, okay. So make sure you enter at that beginning of that phase one to get a good trading result, okay, to get a good trading result, okay. So this market is being an uptrend, okay. It's been an uptrend. Let's draw it for you. It's been an uptrend, okay. So you see it now, okay. So impulsive, impulsive, corrective, impulsive, corrective, impulsive, corrective, okay. Making sure to enter at this spot, okay. You see it now. I drew here like this, okay. Impulsive, corrective, impulsive, okay. So we want to enter this market at this spot, okay, to get our stop loss here, and I'll take entry here, and our take profit above this level, okay. So you see that it's giving us a clear direction of the market which we want to trade, okay. So this is actually a simple strategy, and I hope that with this now, whenever you see a wave strategy or a T-wave strategy, you know that yes, this is a T-wave strategy, this is the phase one, this is the end of the phase one, this is the beginning of the phase two, this is the end of phase two, and we are actually wanting to begin the phase one again, okay. So knowing the open, high, low, and close, okay. So getting your RRR 1:1, okay. So using the EMA, okay, the EMA now, for us to use the EMA now, we set our exponential moving average. The 8 shall be above and the 20 shall be below, okay. So let me show you an example of that. So this is the moving average, this is the moving average, the exponential moving average 8 and exponential moving average 20, which serve as an indicator for us, okay. So if you check out where the market actually turned, you see that the 8 is actually above the uh 20, okay. So the 8 is the blue and the 20 is the red, okay. So if you can set this in your MT5 as well to see how it gives you that formation, okay. So I think this will be all for this video. Thank you for watching and have a nice day.